name is Rose DeWeese. I'm the Association Executive with the Beaver County Association of Realtors. And today's Zoom is going to be about making sure that your clients have good credit, how you help them. And I am just going to introduce the 4 panelists that we have with us today. So from Farmers Bank of Canfield, Beth Fruehstorfer will be going over a very thoughtful PowerPoint that she put together. She is a residential mortgage consultant at Farmer National Bank of Canfield, but not new to the industry. She was a mortgage consultant for over 15 years with what was then called Sky Bank, for those of you that remember Sky Bank, for a number of years, and then moved on to the B2B outside sales in a variety of industries before returning to the mortgage industry at Farmers in October of 2019. So when she's not at work, you can find her spending time with her family, friends, and newly adopted dog, Sam. She also loves to travel, conquer many do-it-yourself home projects, take long walks, relax, watching movies, or enjoy the Pittsburgh nightlife at a great restaurant or two. Beth's sidekick for all of you that are local to here, you know our friend Pam Woodling. Pam began her banking career as a bookkeeper in 1976 Beaver Trust Company in the Midland office. Through the years and many acquisitions later, Pam found her niche in mortgage lending and worked as a production assistant with our friend Ted George at Huntington Bank for over 20 years. In 2016, she made the move to Farmers, assisting high-producing loan officers. When she's not working, she enjoys volunteering at the local VFD with various fundraisers and relaxing with her husband of 20 years, Philip, in their new outdoor pavilion. So after Beth is done doing her PowerPoint presentation, we are going to be joined by our friends at Housing Opportunities of Beaver County. Janine Kennedy is the new Executive Director of Housing Opportunities. She comes with over 20 years experience working for the County of Butler as the Community Action Director, responsible for managing over $4.5 million in grant funding for programs that benefit the low-income families in the community. Her more recent experience has been management in the nonprofit sector. She has earned a Bachelor of Science in Business Administration from Slippery Rock with a major in accounting, and lives in Butler County with her husband, Philip. Wow, 2 husbands by the name of Philip, that's crazy. And enjoys gardening, camping, and spending time with her 3 grandchildren. And Frank Wilson, his experience includes 50 years in credit-related management, including General Manager of the Credit Bureau of Beaver County for 8 years. He was in charge of Equifax's expansion project and management for 10 years, and VP of Consumer Credit Counseling Service for 8 years. 18 years as the Executive Director at Housing Opportunities of Beaver County, and is currently serving as Board Chair. So, introductions done. We can begin. Beth, if you want to start sharing your PowerPoint, take it from there. I am going to put everybody's contact information in the chat. Please hold your questions to the end. This is kind of an involved PowerPoint. And guess what? There's going to be a quiz. Pay attention.
Don't worry, you can fail. It's not a big deal. But anyway, as always, Rose, thank you so much for the warm introduction. Very much appreciated. And of course, I'll pay you later. So, hola, amigos. Happy Cinco de Mayo. Thank you so much for devoting the time to join us today. I truly, truly appreciate it because obviously I understand how truly valuable your time is. So we're all the more appreciative, and hopefully we'll be able to learn a little something or even somehow find this material beneficial. So in consideration of time, just a heads up, we'd appreciate if you just kind of hold off on all the questions until the end And of course, if we don't answer them online, we'll definitely, I promise you, we'll answer them once we get offline. And if you have to bug out like a little bit sooner than we have completed the presentation, no worries. Just if you have any questions, feel free to direct them to Rose or myself, and we'll be sure to answer them one way or another, okay? So now in this presentation, we are going to touch on 3 key points. The importance of credit scores, how credit scores are generated, how to improve or repair the credit scores. So a number of different areas, but in doing my research for this presentation, I was absolutely overwhelmed with the amount of information regarding credit scores and the number of directions I could have taken this presentation. I mean, the content would have lasted us days, but of course we only have so much time, and I believe we were able to successfully consolidate a lot of the information enough to understand some critical elements. So now, although Rose did a very nice bios for us, we really appreciate it. I want to take a quick minute to introduce some of my partners in this presentation and discuss briefly a little bit about their roles today. First and foremost, my dear friend and colleague, Pam Woodlane. She's going to help me assist in answering some questions post this presentation. And then, of course, we partnered up with Janine Kennedy and Frank Wilson, who will be discussing their services and providing information on how you or someone you know can benefit from their services in correcting your credit. So now, on with the show. Before we dive in, I thought it was critical to give just a little background on FICO for those of you who are not familiar. FICO has been a leader in credit risk for many, many years. They actually pioneered the concept of credit bureaus scores a few decades ago, as a matter of fact. Now, before that, however, lending decisions were basically made from paper form applications data that, as you can imagine, was very labor intensive, very prone to error, and even prone to be biased. So FICO thought, okay, that credit bureau file data could be used analytically to increase the ability of lenders to make more informed, more data-driven lending decisions by eliminating many of the problems of being biased. So a result of this is the FICO credit risk score, and new score modeling technology was born. So the main question, how do credit scores or FICO scores work? Textbook definition, FICO is for the prediction of future risk. It's important to know that FICO scores are designed to rank order for that future risk among a population of consumers. So interesting. And then I apologize because I am behind on my slides. So with that said, the base FICO score draws its data from the information contained in the credit file stored at each of the 3 credit bureaus, which I think if I say them, you will recognize them. It's Equifax, Experian, and TransUnion. So the information retrieved from these credit bureaus, however, are categorized into 5 information zones, which are shown here. So you see the personal identifying information, which is at the top. Number 2 is just public records, your legal items, which could be like your bankruptcies, judgments, liens, things like that. Collection items, trade lines, that could be like your bank card, your auto loan, your mortgage, and then inquiries, like who actually pulls your credit, okay? Now, data from 2 to 5, those are the only items used to generate an actual FICO score. So when developing the credit score, FICO never sees the personal identifying information like address or name or employment, income, race, or gender. If you think about it, it's with good reason, of course. That way, nothing can be based on who you are or your name. For instance, Rose can't get a credit score, just 800 credit score for just being Rose, right? And Pam can't get a credit score for being a 550 credit score for just being Pam, you know what I mean? So FICO credit scores can range anywhere from 300 all the way up to 850, and that's what everybody's goal obviously normally is. So in order to get even the minimum credit score calculated, you must have at least 1 trade line open for at least 6 months, and one trade line updated, or I should say used, in the last 6 months. So FICO scoring application contains the logic or algorithms of scoring models needed to produce their credit risk score. So, which is a pretty sophisticated process. The score is designed fundamentally to rank, order the level of risk across the population of consumers represented in the data at the credit bureau. So definitely interesting material. So with that said, I'm going on to the next screen. All right, now when producing a FICO credit score, there are 5 components. 5 seems to be the lucky number here, or weighing factors, each with its own impact in determining a credit score. The percentages you'll see over the next few slides are predicted information available in the credit file itself. So it can get a little confusing, but bear with me. The largest portion of a credit score rating is the payment history. So that makes up 35% of the credit score. So if you pull your credit and you see a 780 credit score, 35% of that is made up of your payment history. So some of the key factors considered in making that is how recent is the most recent delinquency collection or public record. Okay, how severe was the worst delinquency? Is it 30 days? Is it 90 days? How many credit obligations have been delinquent? Now, a lot of people, you'd be surprised how difficult this may be for some people, but to remedy this, pay your bills on time. Set up payment alerts so you'll never miss a payment. Like I have my mortgage payment deducted from my checking account every month. I don't even have to think about it. It's awesome. If you have missed payments, get current and stay current as best as you possibly can. Know that regardless of the type of trade line, and what I mean by trade line is like it could be an installment loan, it could be a mortgage, it could be a credit card, whatever, a late payment will definitely affect you in that same way. So just be careful. That's basically what I'm saying. So the next one, which makes up 30% of your credit score, is outstanding debt or amount owed. So how much does the consumer owe creditors? What percentage of available credit limits is the consumer using? What percentage is outstanding on an open installment loan, for instance? So keeping your credit used low. So let's say, for instance, you're approved for $50,000 credit limit. Don't max it out every month, especially if you're not going to pay it off, right? So pay off your debt rather than moving it around to other cards. I know a lot of people, they can't pay their credit cards off every month, and they have very, very, very high interest rates. I mean, I've seen them as high as 20, 30%. So what they do is they transfer that balance onto another credit card that they claim, 0% for 6 months or whatever. Yeah, but never change more than you could pay off every month too. At least try. So it's just a word of advice there. Okay. Next one is the length of credit history. We just talked about the purchasing history, but this is the length, and this makes up 15% of your credit score. Now, opening new accounts will lower your average account age, which could lower your score if you have a short credit history. So typically it's young people we're talking about. I mean, a lot of people, let's face it, starting in their mid to late 20s, they already have the credit cards and maybe even a mortgage or something like that. But rapid account buildup can look risky if you're a new credit user. So in other words, let's say you're younger or you don't really have credit, but yet you open like 10 credit cards all at once. You go to the mall and you go to 10 different stores, and each store says, hey, open up a credit card, you get 20% off. No. Because opening all those up simultaneously could be very detrimental to your credit score. Becoming an authorized user on someone else's credit card to build responsible credit history. So that's a lot of times with any of you who are parents to like a teenager or someone going to college that doesn't have established credit. This is a good way to do it. You can have your son or daughter, you could they could become an authorized user on your account, for instance, and that could develop credit history until they get their own. Now, typically the 5 years is the average number of years for trade lines on a credit report, or at least what FICO looks as longevity for credit. Okay. Then Moving on, your next one is a pursuit of new credit. So shockingly, if you have, like, let's say one credit card and you use that and you pay it off every month, and that's all you have and you use it forever and ever, that could be bad too. And what I mean by that is if you're shopping for a new mortgage or a car, for instance, map out the period there, 30-day window, and we'll dive into this a little later in the presentation. But like inquiries for credit, number of credit inquiries, 12 months overall, new accounts, number of trade lines open in the last year. Always work on reestablishing credit history if you've had problems in the past, like if you went through a bankruptcy or if you have a judgment lien that you've got cleaned up on your credit. You're constantly trying to restore or better the credit scores. Say no to pre-approved offers. A pre-approval does not mean you're pre-approved, and the creditor will not pull your credit to find out. So what that means is I have this a lot. If a lot of people want to know, oh, what credit, what rate can you give me? Well, I can't give you a rate until I pull your credit to understand what that is. So if somebody says you're approved and they haven't even looked at your credit, I'd be somewhat leery. Opening new accounts responsibly and paying them off on time will raise your score in the longer term. So exactly what we said. Gradually increase the number of trade lines you have on your credit. It could be like if you have a credit card when you first start out, and then you get a second credit card, but you're paying them both off same time every month in full, then you want to maybe get an installment loan or something for like a car loan or something. It's good to have a diverse credit. And then the next one is, which is another 10% of your, is the credit mix. And this is exactly what we were talking about before in terms of what is the mix of credit product types. So it could be revolving credit, it could be installment, it could be your mortgages, things like that. So apply for and open different types of credit accounts, but only as needed. Like you don't want to do the 10 credit cards all at once, but when you do have credit cards, use them lightly, but regularly. So I know sometimes I get a little carried away because I get points on my credit card. So geez, oh man, I charge gum, for goodness sake. So, but if you've been using plastic or credit cards responsibly for about a year, consider applying for maybe an installment loan to kind of mix it up and showing that you're capable of holding credit in different forms. Because it's only worth 10%, you should only focus on mixing your credit once you've been managing your credit responsibly for a while. So that's not your 17, 18-year-old who's in college. Let's put it that way. Next one was the type of inquiry. So I found this very interesting because I believe this is a critical for our discussion, because I know as a lender for myself, one of the biggest concerns of most of my borrowers I work with is the number of times to pull their credit without damaging or threatening their credit score. Probably the number one question, I think, among many people who are at least looking to get pre-approved. Well, when your credit is pulled, there are two types of inquiries that do not impact your mortgage or your FICO score, excuse me. When a consumer is out seeking credit, so what I mean by that is like purchasing a car, purchasing a mortgage, refinancing a mortgage, these are considered inquiries for credits, and only types of inquiries FICO will consider to not hold against your credit depending on the time frame, which again we will go into a little bit later. Now, FICO scores only consider consumer-initiated inquiries for credit posted in the last 12 months. What that means is if you want to go to a credit bureau like Experian, Equifax, TransUnion, to check your credit scores, is that counted against you? And the answer is no. So it's only those where the consumer is seeking to sort out some credit and FICO scores that will consider those posted in the last 12 months. So FICO scores do not consider the following inquiries, however. So promotional inquiries. So in the mail, we have all got the let's see, Chase Bank or Bank of America. Hey, you're pre-approved for 50,000. Congratulations. And they send you a little something. So that is not held against you. They did not pull your credit. They've been looking at it, but nothing that will damage your credit. So no worries. account review inquiries, consumer disclosure inquiries, insurance inquiries, and obviously employee inquiries. Whenever you are newly employed somewhere, they always make sure you're a good egg, I guess. So that's always important. Now, next one. Now, I found this very interesting and very important. So the reason FICO has implemented this, what is called the dedupe logic, I don't know if any of you've ever heard of that, but because they understand a very normal consumer behavior is what they call rate shopping. Now that I'm sure you've heard of, because everybody does it, right? They want the best deal possible. So let's say that my friend Pam, for instance, wants to go buy a car, and the finance guy at the car dealership said he can get Pam the best deal ever. We've all heard it before. And all she needed to do is fill out the application. While she does that, the finance guy sends the information to maybe 1 or 5 different lenders, and each lender is going to pull hard inquiry on her credit, which is consumer seeking credit that we talked about earlier. And but now Pam, all of a sudden, she has 5 hard inquiries on her credit. And let's say Pam didn't buy the car that weekend, and then she ended up doing the same thing the following weekend when she had more time. And then there's 5 more inquiries on her credit. So that's up to 10. Shockingly enough, folks, none of those inquiries will be held against her, because they were all pulled within that 30-day period. Does that make sense? So what is called a 30-day buffer. So auto, mortgage, student loan, related inquiries that occur within the last 30 days will not have an effect on the score pulled to that day. So referring back to this diagram you see at the bottom of the slide, let's say Pam wanted to refinance her mortgage 5 months ago, and she wanted to shop around for the best rate, obviously, because interest rates are low and lenders cannot provide a rate unless they pull the credit. So, but ended up not doing it. Then 3 months later resumed her search. She is clearly outside the 30-day buffer now, right? So no need to worry though, because FICO has implemented what is called the 45-day dedupe window. That could be a tongue twister. Now, outside this 30-day period, multiple auto, mortgage, or student loan related inquiries that occur within any 45-day period are treated as a single inquiry. And let me repeat that. That's very important. It says related inquiries that occur within any 45-day period are treated as a single inquiry. So in other words, so those 3 mortgage inquiries that Pam has on her file that have occurred longer than the 30-day buffer, but within the 12 months and have occurred within a single 45-day window, those 3 mortgage inquiries will not hurt her credit score. It will be considered just as one pull. So it will have a little effect, but nothing like if it's a lot of people think every single pull on their credit or inquiry on their credit is damaging. That's not true. It's a huge misconception. So hopefully that kind of clears up a lot of things for people, because I know myself, before I even got into mortgages, that was one of the biggest things a lot of people didn't understand. So now on to a little test. Okay, this is gonna be fun. And don't worry, like I said, you're not, you may get a little prize though if you get the most correct answers. So in doing so, if you want to put it in the chat, or if you want to send us an email with the answers, that'd be great. These are all true and false answers, so no need to like write essays or whatever. Your monthly income is an important item considered in your FICO score. True or false? Okay. Having a 30% utilization ratio on your credit cards results in an optimal FICO score points. So I apologize, I'm jumping ahead. I said I'd give you the answer for the first one. Your monthly income is an important item considered in your FICO score. True or false? Does anybody want to reply?
Yeah, hold up on that, Beth, because the answers are just starting to come in.
Okay, great.
True or false. So everybody go ahead, put in your trues and your falses. Oh, oh, I'm glad I'm not taking the test. Okay, just a few more seconds. We've got a couple people who did not answer. Oh, Judy, you're so funny. Oops. Okay, if you want to go on to question number 2.
Yes. Having a 30% utilization ratio on your credit cards results in the optimal FICO score points. Oh my goodness, I'm a tongue twister today. Again, I'll repeat that. Having a 30% utilization ratio on your credit cards results in optimal FICO score points.
True or false? Throw in your answers to question number 2, please. Okay.
All right, ready for this question number 3?
No.
Oh.
One more second.
Okay.
We're waiting to hear from Jess South. If she would want to answer. Mindy McKee, Sarah Lohman. A few more seconds. Okay. I think it's safe to go ahead to question number 3.
Okay, great. So paying down credit card balances have a positive impact on your credit score. True or false? Again, paying down credit card balances has a positive impact on your FICO credit score. Again, paying down credit card balances has a positive impact on your FICO score. What do you think? True or false?
A few more seconds. I think they're afraid of your quiz. You made it very hard.
Oh, that's okay. Don't worry, everybody. It's okay. No problem.
Which question number are we on now?
We're going to be on 4 here, but we're on 3 now. We're getting the answers to 3.
All right. I think we can move on to 4.
Okay. Now, the following types of inquiries are considered in a FICO score. So remember back when the biased content of the presentation, mortgage application, is that a type of inquiry that's considered in a FICO score? True or false? Department store credit card application, is that an inquiry that is considered in a FICO score? The next one is employment screening. Is that inquiry considered in a FICO score or affected in a FICO score? And then last but not least, insurance application. Is that inquiry considered in a FICO score as well? True or false? And then I will go back and give you the answers once everybody gave their answers.
We're going to do a final shout out, if you don't mind. I've got a few. Judy, you responded. Do you mean to say A, B, C, and D, like all of the above to this multiple choice question? I'm so confused. Okay.
That's okay. We could just go over the answers, Rose. That's not a problem.
You said these were the rules, and I'm doing the rules.
You're the boss.
Okay, so just South, no, Judy, sorry. Okay. Okay, so if you see any questions there that you didn't answer and you want to answer now, put the question number, question 1, question 2, question 3, or question 4, and write down your answers after you've identified the question number. We'll give it a couple minutes and a couple seconds more. And for anybody changing the answers or any of that, so we can get it down. And I am going to put in the chat Beth's number, Beth Fruehstorfer's number, and the number for Janine and Frank at Housing Opportunities of Beaver County. That'll be in the chat. I'm going to include that. If you have any questions, you can start putting your questions in the chat if you like, but we're going to answer them after Frank and Janine weigh in here at the end. So Beth, I think we've got everybody's answers in. If you want to go over the answers.
Yeah, that'd be great. So question number 1, your monthly income is an important item considered in your FICO score. That would be false, because remember, no personal information, no race, gender, income, address, name, nothing is considered important for your FICO score. Second question, having a 30% utilization ratio on your credit cards results in the ultimate FICO score points. That is false. That would be false. Number 3, paying down credit card balances has a positive impact on your FICO score. That would be true because you're paying down debt. That's always a good thing. And showing you're consistent with that. Key. It's a key to good credit. Fourth question, the following types of inquiries are considered in a FICO score. A is mortgage application. That would be true because, of course, you pull credits when you do a refinance or a purchase or something along those lines. Those all reflect in a FICO score, especially depending on the time frame. Remember that, 30 or 45 days within a 12-month period. B, department store card applications. That would also be true. Remember, don't go to 10 different stores. Take advantage of that 20% off your purchase if you open a credit card for that store. Don't do that. C would be employment screening. That would be false. That has no reflection on your credit score whatsoever. And then last but not least is insurance applications. That too, no reflection whatsoever on your credit score. So good job, everybody. And I'm going to end on this final slide, which is a couple of sites that you may find beneficial or useful in terms of finding credit scores. Those are quick descriptions of what each credit score or each credit website is about and what it could help you do. Again, you could, by all means, I think, Rose, are you going to be sending out copies of the presentation or have a link to it?
Right. So in our weekly communication, which will be tomorrow, if you send me your slide deck, I will link that to our email.
Perfect. All right. Wonderful. So there you go, folks. And now I'm going to pass it on to Janine and Frank, who will now introduce their services and, of course, explain a little bit better how they can assist you. It's all you guys.
All righty, so give me 1 second here and I'm gonna get Janine and Frank on screen. Okay, Janine, if you wanna unmute, oh, you are unmuted, and then I don't know if you have to accept being a co-host. All right, Janine, if you guys want to start, you and Frank.
Okay, can everybody hear us?
Yep, I can hear you. Great.
All right, I'll start since I'm the oldest person here. But since 1993, Housing Opportunities has administered the Beaver County First-Time Homebuyer Program. And it started we provide down payment and closing cost assistance for first-time homebuyers based on income levels provided by HUD. And they come out once a year. And there's a new income level sheet that's going to come out first, I believe. So one person household, you have to be under $47,500. Then it goes up appreciably based on the number of people in your household. There are some rules. You can't have $5,000 in liquid assets. It has to be, this has to be your first time. Now, divorced individuals, you have to wait 2 years. Bankruptcy, typically, it depends on the lender. Some lenders are a little more lenient than others if you file bankruptcy, but at least a year out. The rules are pretty simple. We provide now about $3,000 in down payment and closing cost assistance. And it's based on, and there's a small admin fee. It's a soft second mortgage is filed with the county, and they'll go into third position if need be down the road. But typically, and it's all forgiven. If you earn a house 5 years, it's forgiven at 20% a year. If for some reason you pay off the house or sell a house, you have to pay the remaining assistance back to the county. And this is, as I said, since 1993. At one time, we gave $6,000 a year, but our budget was cut the last 3 years. So, and the rate of individuals has slowed down considerably. I think in 2012, we helped 28 first-time home buyers. Now we only have enough money to help 3. And we struggle sometimes to get to 3 people because a lot of lenders have their own programs. But we can also combine our assistance with some others. First Front Door, for example, that's a program operated by the Federal Home Loan Bank, where if you save $1,700, they'll triple it and give you $5,100 in assistance. And we'll go into third position behind them. So, but they run out of money fairly quickly. And I think I want to say at the end of April, they opened up their new grant program. So you have to be an approved lender by the Federal Home Loan Bank. And we have, there's requirements. We're sort of at the back end of the process. The lender has to approve the mortgage. So we have to advise people to find a house, apply for a loan, and once they're approved, they have to come in for a class, a pre-purchase class, and we explain things like who's going to cut your grass. And believe it or not, we've had people that they're used to renting, so they have no idea what entails home ownership. And don't apply for credit while you're in the process. Your credit score. Zillow did just a informational survey on the understanding of credit scores. Only 67% of young people knew what affects your credit score. And one of the things is your score is affected from the day until the day you close on the house. So do not shop for credit. And typically, minimum credit score is around 620. Some lenders now it's about 640. But Fannie Mae, when they first came out with the guidelines, it was 620. And it was supposed to be a guide. And, as I'm listening to Beth, I'm so old. I remember when the Credit Bureau of Beaver County, this is before credit scores. It was paper files. You got arrested, it went in your credit file. So that it became much more objective. And in 1985, when I went to work for Equifax, it was at the forefront of credit scoring. So, I've been down the road a long time, and some of the stuff that Beth talked about has changed. Shopping for credit used to be 15 days for cars and 30 days for mortgages. Now I see it's 45 days. So some things have changed. Public record has changed. We used to put judgments on credit reports. And now, and Janine can talk about that. She's in a webinar today where you're not putting judgments on anymore unless they've been disposed of. So I won't get into the weeds about credit scores and credit, because I remember from the beginning. And there are insurance models too. So if you apply for car insurance, they'll go through their insurance models, not FICO. And there's also another, besides FICO, is a Vantage credit score. And that's each repository, Experian, TransUnion, and Equifax. They score their own credit files because there are differences. Some lenders will use Vantage scores. They're typically lower than FICO scores. So I don't want to get into the weeds, but I'm just letting you know that that's out there. So sometimes your FICO score will be irrelevant because they'll use a Vantage score. So if you've ever seen John Alzheimer, but Larry King, before he died, he'd do these infomercials. Well, I know John Alzheimer. We had him in Pittsburgh doing a seminar once. Very interesting guy. But anyhow, our program, and we can repair credit too. Some people, the first time home buyer come in with you no credit, we recommend a secured credit card where you can open a secured credit card at a lender for $300, $500. They put it in a savings account for you, and then each month you use it and pay it off. You can establish credit. We have had that both successfully and not so successfully, because we did have a person. There were two houses that the housing authority built, and they had rent-to-own programs. And one individual had a voluntary repossession on her credit report, and diligently came in for 2 years. It took her 2 years to clean up her credit report. The other individual had no credit. We recommended a secured credit card, and she did purchase the house. This individual got a secured credit card. It's only enabled them to open up 10 credit cards, and they're still renting the house. They have not paid. The housing authority still rents them the house. So there are pluses and minuses, but there are no quick fixes to repair your credit. You have to come in, and I know this for a fact. There are some companies that will dispute every trade line, and because the lender has to verify the trade line, it will come off the credit report immediately. However, when they do re-investigate and find out it's accurate, it goes back on the credit report. So there are no quick fixes. And this, as I mentioned, this individual came in for 2 years and worked hard. And she's still in the house. It's in Beaver Falls. Both of them are in Beaver Falls. So there are a lot of things that, we recommend, as I say, don't shop for credit. It's a good program. It's a forgivable grant. And we've been doing it a long time. So with that, I'll turn it over to Janine. She can talk a little bit about what she learned today on this webinar, and a couple relevant items about credit scoring.
So Beth pretty much stole everything I had to talk about, but thank you, Beth. I love your PowerPoint. One of a big takeaway that I've learned today and learned in training is everyone is entitled to a free annual credit report. And this is because of the Fair and Accurate Credit Transactions Act. So everyone is a free annual credit report. And if you go out, and I'll put it in the chat, to www.annualcreditreport.com, and you can request 1, 2, or 3, all of them. Now, it does not give you your credit score, but it gives you a complete report. It shows everything that Beth talked about: your personal information, your employment history, all of your open credit items, and your payment history on those. So you can actually see like what's going on in your report. It'll show you if you have liens against you, everything. It just does not give you the score. Right now, if you go out to that website, it says that due to COVID, I love that phrase, it's allowing people to go out and pull a free credit report weekly. You can do all three of them every week. I don't know why you would, but I think they're looking at for fraud situations. So in case people are, there's a lot of fraud going on during COVID, but free annual credit report. I recommend going out there every year and getting them and just looking at it, because that's a big thing. People may not, I think we were just chatting, a lot of the people probably don't realize their credit, they don't know their credit score. They don't know what's on their credit report, and they don't know until they go to you, Beth, and apply for a mortgage. And that's when they find out, oh my God, what's on here. So it's good. That's the advice I can give to people, is to go out and look at your credit report and review it and just see what's on it. FTC, yeah. And you can dispute too. So I actually did this for myself. I went out and Experian and TransUnion, I set up an personal account with them. They sent me my credit report. TransUnion, I actually paid to get my credit score at a nice rate of $24.95 plus tax. If you go out to my FICO, they're charging like $19.95 for each one of them, or a discount of $59.85 if you want to get all three. So if you want to get your score from them. Now, Experian actually gave me my score for free. When I pulled up my credit report on Experian, it had my score, my FICO score. So that's as of right now today. And just review them and look at them and see what's on there. This is advice to give to everybody we have coming in here. Because we pull, when folks come in here for counseling, we pull the tri-merge report from Credco. And it shows everything on there, gives them all three of their scores. And the counselor reviews that with the folks, goes over it. And I'm sure some of those folks are surprised. And when I've been doing file reviews here, I have seen all kinds of different credit reports, from very small ones that are 7 pages long to ones that are 25 pages long, just because of all the data and the information's on there. So that's my big takeaway from this. And I will type that in the chat to everybody, the annual credit report. And like Beth said, if you go out there, Consumer Financial Protection Bureau, another good resource website to go to, because they have all kinds of instructions on how to understand your credit score, what your credit report looks like. So they're another good resource for folks. I don't know if a lot of folks out there really use them, but the CFPB website as well is another good one. I think that's about it. I can't think of anything else to add.
Pam Woodling put a question in the chat for you, Frank. Pam, do you want to unmute yourself and ask, or? Because I think there will be a little conversation.
Okay, Frank, just curious, I know in the past when a homeowner took the opportunity and got a grant to purchase their home, if within that 5-year grace period of paying back the grant funds, can they refinance, and will that soft second mortgage be subordinated, or would that be an issue with the bank that's doing the refinance?
Well, you have to get permission from the county. I think we've had this in the past, ma'am. I want to say the county, it depends now, at least the Signal retired, flexible, but sometimes the county required them to pay off that.
Okay, that's good. Thank you.
If there are any more questions, just feel free to unmute yourself and ask. Like I said earlier, we will be putting Beth's slide deck in the tomorrow's email communication with our members and affiliates. And of course, if you have any questions, I also put Beth Fruehstorfer's direct phone number in there. I put in the number for Housing Opportunities of Beaver County, And if when the chat goes away, you have any questions, just give me an email. And I kind of always say this at the end of all of our presentations. If you can think of a good idea for one of these Zooms, we are going to be taking a break. I've got some major projects to work on this summer. But if you can ever think of a good idea for a presentation, if you think it's a good idea, then it's a good idea. And we would love to get that into production. So I'm not seeing anything else.
Rose, it's Jessica. I have a question.
Yeah, jump in, Jess.
So I know I have a lot of clients who are like, oh, my Credit Karma says my credit is blah, 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 blah. What is the biggest difference between what the actual credit reports are and what something like Credit Karma produces? Like I just want a little bit of a better explanation that I could tell them Credit Karma sucks. You need to get your credit
Well,
ran. Is there something like that I can tell them, like a better spiel?
Well, that's a good description of Credit Karma. I wouldn't put a lot of credence in Credit Karma. Typically their scores and how they monitor are not. They don't have the access as the repositories do to your credit files. There'll be differences among the repositories because not everybody reports to all three. Small credit union or credit unions are typical lenders that don't report to all three for whatever reason, the cost. So I wouldn't put a lot of faith in Credit Karma. There's some consistency with what they're for fee service to. They'll send you something, but if you want to get into the weeds with them, they'll charge you a fee. Just like credit repair clinics will charge you. And if you've seen ads about you don't have to pay your credit card bill, we'll negotiate for you. You can do that yourself. Unfortunately, it appears on your credit report as settlement paid less than agreed, which is negative. So that affects your credit score. There's a lot of, I would, look at commercials with scams, about correcting credit reports. There's no quick, as I mentioned, there's no quick fixes.
And that's one thing I took away from my training earlier this morning is the trainer said Credit Karma is an estimate. It's not the same as getting your FICO credit score.
Yeah, and that's what I wanted to confirm I wasn't lying to people because I tell them all the time that it's not a great way to get your credit score. I just didn't know if you knew what they pull, but it makes sense with the repositories or whatever you call them. They don't pull, they don't pull everything. So, okay. I was just curious. Thank you.
I'll piggyback off of that, Jessica, because I've had clients who've come to me and I could say in the last 3 months that they want to get pre-approved or, and then I said, well, do you have a ballpark of maybe what your credit score will be? And they said, oh, well, I think it's like 750. And I said, oh, that's fantastic. And it's funny because I go to pull their credit, assuming like this is a great score. And no. And I said, it's like 620, 630. And I said, just out of curiosity, where did you get that credit score? And every single time it's been Credit Karma. I was like, oh my goodness, it's crazy. So yeah, so I piggyback off everything Janine and Frank had said. So
Well, even if you look at your credit score from the 3 bureaus, it can vary. I mean, mine doesn't seem to vary that much, but it can vary from one to the other. So it's not like all 3 of them are going to come up with, a 680 credit score, 720 credit score.
Yeah.
So
So does it? Oh, sorry.
Done.
No, so I do run my annual credit score once a year. I've been doing that, especially since they made it free. It makes it so much easier. Now I have some things on there in regards to addresses. Should I be concerned about removing like my ex-husband's address off my credit score? Does that affect me? Should I fight that? Is that even worth fighting about? It's not credit, it's just the address.
I wouldn't, having them do that is, and I was telling Janine earlier today, when because credit clinics would dispute every item on your credit report. When I was working for Equifax, they were getting Citibank was getting 30,000 inquiries a day. And this is a long time ago. So by the time they get into the, they're concerned about trade lines and not so much, it won't affect you because you're applying for credit under your current address.
I just wanted to double check. I didn't know whether it was worth fighting for, so you answered my question.
Look at the open accounts and make sure they are all your accounts. Make sure nobody didn't open something fraudulently.
I've done that. They're all fine with that. It's just I guess they just put in associated, people that I could be associated with. I don't know if that's why that was up. But I just didn't know whether it was worth fighting for.
Well, joint too. My husband and I have a Lowe's credit card. It's probably the only joint account we have right now, and it's showing up on my credit report as joint account with Philip. So that kind of stuff, if you're in a joint account, is going to show up.
Okay, thank you.
I have a quick question for Frank and Janine. And in my research, like I had put in the chat section, I have found many inconsistencies with my research, but how long does it typically take? And I'm sure it kind of depends on what it is, but how long does it typically take to clear up your credit report with inconsistencies?
They have 30 days to correct any perceived errors that you think. And if they don't, then what Janine said, the CFPB will, you can go right to their website, explain the situation, if it's derogatory information, and they'll intervene and help you get it corrected. It's as I mentioned, there are a lot of there are companies out there that will charge you for stuff that you can do for free, and that's one of them. The settlement thing is another. It's a big industry that very little people know very little about, and how you get into the weeds. But that's what I would do. If it's something that's been on there a while and you're frustrated, go to CFPB. And do you have their website? Maybe we'll put it in the chat room.
I'll find it and put it up.
But
something to keep in mind, if consumers dispute a charge or an account, and it shows that on the credit report, that account's no longer factored into the credit score and needs removed.
if it's disputed,
If they dispute it, it doesn't get calculated into the current score. And depending on what loan they're doing, government or conventional, that comment may need removed in order to get the most accurate score.
well, that's true. But if they do verify it, 30 days later, 60 days later, it'll go back on there. I know we were down that road with.
Frank, your audio's cut out. I can't hear you. I heard up to road. We were on that road.
No, when I worked for Equifax, as I mentioned, they would get so many disputes a day that, and they have to come off, and it doesn't affect your score. But once they verify it and put it back on your, they verify it to be accurate, then it could be 30 days, 45 days, or 60 days down the road. It will go on your score. It will affect your score. But
doesn't it come down to you also? How much documentation you can show, you can provide. It's not just they take your word for it. You have to kind of document why it's wrong.
Well, some of the issuers, credit card issuers, American Express is great for that reason. You dispute an item, it comes off your bill, and then they typically it'll stay off. They give the creditor 60 days to verify the information, and if not, it stays off. So it used to be, you make a payment. It used to be we had to pick up tapes they were loaded once a month. Now as soon as you make a payment, it's reflected. It's all done, automatically now. Your balance goes down, your score goes down. It's a big moneymaker for the repositories. They charge, if Janine said $24.95, that's a lot of money. I know when they first started to sell them years ago, I know Equifax made $30 million one December, selling credit scores. So there's a lot of push to give it for free, give scores for free, but it's still a moneymaker for all three credit reporting agencies.
If you do go out to annualcreditreport.com, like I said, you have the option to pick like 1, 2, or 3. It's like little check boxes. I recommend just do one at a time, because like I checked all 3, but I had trouble getting back to the other 2 that I checked. So just pick TransUnion, do it, then go back to the beginning, pick Equifax and do it, versus trying to get them all at once. So.
All right, everybody. Well, thank you so much for joining us today. It's been a pleasure having you. And great thanks to our panelists, Frank Wilson, Janine Kennedy, Housing Opportunities of Beaver County, Beth Fruehstorfer, Pam Woodling of Farmer National Bank of Canfield. Thanks, everybody.